So you can see that, on this larger time frame chart, this is the weekly chart of ES, the market's at this pretty significant inflection point where, you have the December lows, you have this little balance and breakout area. So this is an important support area in the market. And now the question going forward is whether this area is going to actually provide some level of support, because it is one of the better areas of support. The market's really overextended into it. We are about 30% or so off the all-time high. So, if larger time frame buyers are going to step in, then like today was the time. Like this was the spot where they could have stepped in or should have stepped in. So if this area holds in the overnight session heading into tomorrow, then the market still has a chance to stabilize. But if we continue selling off below the zone, below today's low, then that doesn't really bode well for ES or the markets in general, especially given the recent rate cuts and the stimulus package. And I think there's another aid or stimulus package that's in the works right now. So given all of that, if the markets still don't have any kind of floor here, and it just shows a lack of confidence in the markets. And you break this area and you start selling off, where do you go from there? Do you revisit the swing lows around here, around 2240, 50? Do you go to this, breakout area in the high 2100s before the buyers step in again? Like how low does the market then have to go to become attractive to buyers again? So, I think this is a really important spot. And if we are going to have a chance of stability and some level of normalcy, I wouldn't say normal because I don't think we're going to go back to a normal market environment anytime soon with everything that's going on. But if we're going to have a short-term floor, some support, then this is it. And if buyers fail to hold it here, then I think that the markets may have to go much lower in order to become attractive again, where the risk is worthwhile. So, bigger picture, if the market's selling off into this large balance area, right? It kind of looks like this. I mean, there's a lot of support built in over here. And I think that in the event that we do continue selling off, and let's say we do actually revisit this area, I think it'll be very attractive, even with all the risk and the unknowns and all that, right? At certain prices, it just makes sense for buyers to step in because they're being rewarded for that risk. So like, if you're buying today at that 2350, 51 area, at least the risk reward is there. Yes, you're putting risk on. That's always the case, but you're being rewarded for that risk. And there's that, upside potential of getting a 100 point, 150 point bounce. If you start selling off below here, that idea sort of becomes questionable until the market reaches the next better area of support, which might be, near 2190 to 2200. And then, the upper edge of this balance would be very attractive as well. So like the upper 2000s, right? Let's say 2088 to like, 2100 or so. Like that would be a very attractive area for buyers first time down. And it would be worthwhile to put that risk on. But, we'll deal with that later. Right now, the main question is, is this area going to have a chance of holding? So far, buyers have stepped in there, and now heading into overnight, heading into tomorrow, how ES behaves here is going to help us figure out the bias going forward. If this area holds, then there's potential for consolidation in the recent range, and we can slowly maybe even start to make our way back up. If this area fails, then it's anyone's guess where this is going to go. So that's the environment we're in. Good opportunities on both sides, high momentum, high volatility, as long as you are managing your risk correctly, using wider stops, which is something I've been harping on for a few weeks now, ever since we've gotten this big volatility. It's, in my opinion, critical to use wider stops in this environment and reduce your position size to properly manage risk. And if you're doing that, then the reward potential is so high at some of these zones that it is worthwhile to put that risk on. Because remember, every time you put a trade on, the risk is the same, right? The way that at least we manage it. And if you haven't already, then definitely watch the webinar on risk management and money management, position sizing, all that stuff's covered in there. And that webinar is from many, many years ago, but those concepts are timeless. They haven't changed. So as long as we're managing risk correctly, adjusting our position size to account for the wider stops and the volatility, then the risk is the same in this environment as it was in the previous one, right? It's not like this high volatility environment is inherently more risky. And the reward potential, even though we need wider stops, is much, much greater than the previous volatility regime that we had, where the ranges weren't that great and it was kind of this trudgy upside move. So remember back to how the market was trading here, that wasn't a great market to trade. Compared to that, this is actually a very high opportunity market as long as you are accounting for the increased volatility. All right, guys, we will wrap it up over here. I hope you guys are all trading well. Let's see how ES plays out overnight. All right, guys, that's it for today. Good night. Catch you tomorrow.